Hey guys, Fox Protocol Mining here, coming at you with another video from the Fox Den. So in today's video, I'm just going to go over the difference between ROI and break-even, and how you might be using the term incorrectly. So firstly, I'm just going to define each term. So your break-even is the point where your expenses and your investment are equal to your revenue and or what would be your profit. Your ROI, or your return on investment, is a ratio between the net gain and the net cost of an investment. So what does that mean? So we've defined them, and maybe that's not enough. So you need a visual learner, because that's how I operate. So I'm going to explain this again visually here on a spreadsheet. So bear with me here, because we're going to make quite a few assumptions, so this is easier for you to understand. Firstly, we're going to assume that you bought a 3070 GPU at $1,500. Now, I went to whattomine.com and I selected a 3070 using the basic clocks, and I'm assuming that it's at 10 cents a kilowatt hour. Calculate that, and it will say that you're going to generate $8.56 in revenue and $7.55 in what they call profit. So, when does that actually become profit? Well, assuming at day one that you make your $1,500 investment, you're generating $8.56 a day. You're paying $1 and a penny to run that card every single day. So let's say that you mine for 27 days and you determine that it's not for you. Let's assume that you bought the card brand new in the box and now you're selling it used, so you're selling it for slightly less. So let's say that you liquidate the card for $1,350 minus your current loss, which means that you're still into the card about $1,300. That means that you made a profit after you sold the card for $53.85. So your ROI on your initial investment of $1,500 is 3.59%. So in 27 days, you made 3.5% on your initial investment. I mean, that's not terrible, considering the fact that you used the card, you mined, you made a little bit of money, you sold it, and you still came out ahead. That's good. You know, any investment where you make money is a good investment. Now, let's say that you want to hold the card until you break even. Okay, so you want your mining revenue to break even. So we're going to keep going, we're going to keep going, we're going to keep going, and on day 199, you finally did it. Your card finally paid for itself. All right, so one strategy some people employ is they'll do this, where they will let the card mine and pay itself off, or break even, just as your break even point, and then you sell the card again for slightly less because you've had the card longer. Let's assume that the market has calmed down a little bit, so now the card's only worth $1,250, which is a further $100 loss from what we had up here. However, because of the fact that the card paid for itself, which means that you broke even, you now generated $1,252.45, which means your ROI on your initial $1,500 investment is now 83.49%. So your ROI significantly increased under this figure, almost doubled. Now, let's say you want to continue to calculate your ROI, but you don't want to sell the card. Okay, well that's pretty simple. We just continue mining, and then at any point, whatever your profit is at this point, because this is now profit, because we broke even, so anything after our break-even point is now 100% profit, minus our electric expense, which we track. So after 226 days of consecutive mining, assuming that your profit would stay stagnant and your electric would stay stagnant, you're now at a 13.75% ROI. Now, why is that so much lower than this? Well, that's because at the end of the day, you still have this asset. You haven't sold it yet. You've just held on to it. So your mining profits are up 14%, And you still have the asset, which you could still potentially sell, which would further increase your return on your investment. However, you don't have to sell. Most miners don't sell. In many cases, miners will literally run a card until it can't run anymore. There are many 3 and 4 gigabyte cards still in service for this reason, because miners will pay the card off, they will break even, and then they will continue to mine, which causes their ROI on the card to continue to increase. Whereas if you were to liquidate the card after you broke even, your ROI would be final, which means at 83.49%, your money is now back in your pocket and you can no longer earn any money on this investment. Now that has pros and cons. Pros meaning that money is now in your pocket. It's money that you can spend. You can do whatever you want with it. It's your money. The con is you also cannot continue to make any money, but you don't risk any money further because you're now out. It's in your pocket. Miners take a risk because as we continue to mine, our ROI is not guaranteed. If Ethereum were to move proof of stake, for example, our profitability on Ethereum was 856, with the next project down being Haven Protocol on this particular card at $5.33. That is a pretty hefty hit to your total revenue. I mean, it's not quite 50%. It's about a 60, I'd say about a 60% shake, but that slows down the accumulation of this figure. So I hope this sheds some light on the subject for you guys, specifically the difference between what break-even and return on investment is. Break-even, very simply, being the point where your cost turns into profit, and ROI just being the measurement of that profit or loss, because your ROI can be negative if you were to sell prematurely, or the card's not making you enough money, or your electric expense is greater than your revenue. Then in those situations your ROI is going to be negative and you're going to lose money, and you'll continue to lose money as long as you mine negatively. That's another reason why tracking your electric expense is very important when it comes to mining. But guys, that's going to be it for this video. I hope that this was enlightening and that it covered everything in a way that made sense. If you do have any comments, questions, or concerns, or criticism, please hit me up in the comments and let me know. This is the Fox Den, and I'm signing off.